Right. So uh let me see which pair can I just go to. That's the different pairs altogether. Forex. Right. Let me go to today. Let me just go to the currency pair that I trade. The only currency pair that I trade is GBP USD and other. Okay, so this is GBP USD. This is the pound against the dollar. That is what that symbol means. So uh, if you notice, it says that this chart is limited. It's starting from 2021, but you can actually see what is happening. You can actually see that from here, from this highest point there, to this lowest point down there, it was just downtrending. So the reason why I also emphasize and why I also encourage each and every single one of you to have currency pairs as well on your watch list. Currency pairs, especially the main currency pairs. The main currency pairs, I'm talking about your GBP USD, your Euro USD, your odd USD, everything. Most of the major pairs are those that contain the USD. So at least if you have at least one currency pair that you trade, have at least one currency pair. If there are two, that's also fine. But I encourage you to have one currency pair that you trade and that you make sure that you are always following, you're always monitoring whenever it's going up, whenever it's going down. Because currency pairs, the good part about currency pairs, they're actually good, especially when it comes to swing trading. Currency pairs are good, especially when it comes to swing trading, because they can go in one direction for a very long time. They can go, for example, if you look here from May 2021 up until October 2022, it was just downtrending, going down, going down, going down. So it means if ever you really caught this trade nicely, it was going to be a very, very huge swing trade. Whether you caught it, I don't know which strategy would you have used, but if ever you're in our class, you realize that we cover both institutional and retail trading strategies. For example, in this case, this is a trend line breakout, as you can see. Trend line breakout. Okay. After a trend line breakout, according to the institutional perspective, you can also see that there was an internal change of character. Internal change of character were here. Okay. Here as well, there's a change of character here. So already we have 2 points. So meaning this breakout, you could have sold breakout and the retest, you could have sold there, targeting this low, because if it came here and failed to break here, it was going to continue going up. So it breaking there, it was a sign and a heads up to say it's now time to, the market momentum is now heavy towards the downside. So that was the change of character there. Change of character. Change of character simply means market momentum has shifted. If ever we're going up, market momentum is now strong towards the downside. So this change of character, that was the heads up. Trend lines, the reason why I always tell you that whenever you're using trend lines, you need to be so careful, especially when that trend line doesn't go on to break market structure or to change character like this. Let's say this trend line, for example, here, this trend line broke out here, right? But if ever this market went all the way and failed to break this level, it was going to be a scenario whereby it comes, bounces, and continues going up. So many people there, especially trend line traders, people who only know trend lines, they are actually confused there that what is happening because we thought it was now a downtrend. But if a trend line doesn't go on to break market structure, it's not that relevant. So in this case now, we actually went on to change character here to the downside, which was good. So after a change of character, we always expect this pullback. So here you could have sold based on trend line breakout and retest whatever, targeting this low. This was a swing trade on its own from here to there. It was a swing trade. You could have held this trade from 21 January. This was 16 January actually. 16 January to 18 January. It's almost a week of holding this trade just from there to this target, right? After changing character, we had we have this supply here. This one, it seems like it was actually retested like this. Then we also have another one here. So we have two levels, this one and that one. Those are the two main levels that we're expecting the pullback to reach onto. And if you put your Fibonacci from the top to the bottom, you realize that somehow, the pullback, it happened around 61.8. In between, it was actually an in between. It was almost close to 61.8, but in between 50% and 61.8, which was a good trade. So here, how many confluences already I have? Trend line break and retest, change of character. Number two, number three, a Fibonacci retracement. Number four, the order flow is now bearish. Already I have four major confluences supporting this trade. Someone was asking me, why is it that when you're analyzing, you start from the higher time frame and you enter your trades on a lower time frame? The only reason for entering on lower time frames is to minimize the what you call the stop loss. It's just to minimize the stop loss. They're actually big players, people who are trading thousands and big thousands of dollars, or even millions and millions and millions of dollars. They actually don't go down all the way to 1 hour, 30 minutes. Some of them, they actually stop here. They start from the monthly, they come to the weekly, then they enter their trades on the daily. Those are the big guys. People who can actually hold trades for weeks and weeks and weeks and weeks. Those are bigger than swing traders. They are way beyond swing traders. We actually call them position traders. Position traders, these are traders that can hold trades for weeks and weeks and weeks. Sometimes they can even go as far as months and months and months and months and months of holding trades. So what I'm simply showing you here, I'm simply showing you the way these markets move is the same. The same way your crash and boom wave in Allah is the same thing. The same way I'm analyzing this one. So trend lines, they always have there's always a downside to trend lines. There's always a downside to trend lines, because trend lines, sometimes the market can break a trend line, and breaking a trend line doesn't mean that it has broken the trend or what. Sometimes it can break out of a trend line only to start to form a new channel, or to start to respect another trend line. That's only the disadvantage of trend lines. So here you would have taken sales here. Sales there, your target was this 0% here. First target, second target. So now, if ever you stretch this Fibonacci retracement, those that are in the mentorship class, you know that a full rotation, a full move here is when this market goes all the way to the first target, which is 0%, give a pullback. Next target is negative 27, pullback. Third target, negative 61, pullback up until it reaches negative 100%. That's a full move. That's a full move. This is just one of the things that I just wanted to share with you. This is a complete move when you take from that all the way to negative 100%. So one can actually hold the trade all the way to negative 100%. It's actually an art that most people, they don't know. So here, as it will be going down, I want you to see as it was going down all the way to negative 100%. All the way to negative 100% as it was going down. So because this one is where you're expecting, right? So when you zoom out like this, these major lows here, these are your major targets. These are other major targets that you also consider. Negative 100 was going to be another major target. So according to swing targets here, the first swing target was 0%. Second, third, fourth, and fifth. This low here. So all those 1, 2, 3, 4, 5, those were 5 take profits for a swing. Someone was going to hold. Holding, it's very good. Holding trades, it's very good, because the market will always move from one swing point to the next. The market will always move from one swing point to the next. In this case, came back to this supply, you could have sold again there. So here you could have sold. 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 Then here We came all the way and that was a break of structure. Now this is a break of structure. Break of structure. Break of structure. Break of structure. After a break of structure, we expect the same thing, pull back. Pull back where? This is our supply zone then. Why am I not selecting this supply here in between here? Right. Why am I not selecting this supply in between here? Right. I want you to listen to me very, very carefully. Listen to me carefully. If you get this point, you are way much above the rest of the traders that are not aware of what I'm saying. So when a bus is coming from a bus station or whatever you call it, right? When we are coming, let's say a bus is coming to collect people. This is the first station. This is the last station. That bus will make sure that before it goes where it has to go, it has to collect everyone on every station. They will never come to a certain station and not come to if ever there's another station. For example, in this case, this is another station that was not even retested. If you check, it was actually broken but never retested. That is what I'm simply meaning by being a bus station. So this was first bus station, second bus station. So now they have to collect everyone. Where is everyone? There are people that are here and there are people that are here. These ones, yes, they were collected, but we also have to collect these ones before we go. If you check, even after going, it also came back and pulled back into this supply. That was also another entry that you could have entered. So here there were two entries, this one and this one. Those were high probability entries. This one, because of this supply, order flow is still bearish. This one as well, break and retest off. This it was now a demand, but it's now a supply as well. So those two were entries that you could have entered. Where is our next break of structure? Here. So these entries, you would have targeted this low. They were also swing trades. If you check, all those swing trades were trades that, if ever you really put your lot sizes nicely, these are trades that could have made you good money. So now, let's go all the way. After a break of structure, what do we expect? Pull back. Let's go. Let's follow structure. Where is our first bus stop? We have this supply. And we have this supply. And we have this supply. The same concept that I spoke about here, whereby we have to collect everyone on every bus stop. Everyone on every bus stop, especially, so meaning you can't take sales here, you can't take sales here, because there's still a bus stop that was not retested, which is this one. That's a supply that was not retested. Came first time, didn't retest. This one also didn't go all the way there. So there, where was your next other entries were here? There, you could have sold there. Where is your target? You're targeting this low. Because order flow is still bearish, remember. Order flow is still bearish. And when order flow is still bearish, what do we expect? We expect continue dripping and dripping and dropping and dropping and dropping. So if you look at this, these were simple opportunities that were coming each and every single time, swing opportunities. This one you could have held for a week, this one a week, this one a week, this one 2 weeks or 3 weeks, this one also 2, if not 3, if not from 11 January to pretty much. This was a longer one. But all of them, these were opportunities. This I'm simply showing you so that you see that there are so many opportunities that are always there on the market. The problem now, this is where the problem is. Listen to me very carefully. This is where people lose. They lose, number one, on zones like this. When the market taps into this zone, you want to quickly sell. Why are you selling here whilst we have a bus stop that is above there that still hasn't been tapped? It's because of impatience. So order flow here is still bearish, but you find people selling on minor zone. This is a minor zone, because if ever there are other zones that are at the top there, this one is a minor zone. So focus on the major zones. Those are your extreme untapped supplies. Those are your major zones. right? Those are your major zones. So once the market comes into the major zones, the probability of the market dropping. So now here, why did it drop all the way and never even came back to the supplies now? It was now the strength of the sellers. It was the strength of the sellers, the strength of the sellers, the strength of the sellers, the strength of the sellers. If you check even here, I said we sell here, our target is here. This was the break of structure, right? After this break of structure, it only put back into this one. Didn't come all the way there. Right. Why didn't it come all the way there? There are two reasons to support that. Number one, when the sellers, they are now strong in the market, they will not continue to have these deep pullbacks. These are deep pullbacks, push, push. So this is a balanced. If you check this, in as much as it's downtrending, but it's a balanced downtrend. A balanced downtrend, this is a downtrend whereby the push and the pullback, they're almost of the equal size. Almost of the equal size, not equal size, but almost, mostly they are actually above 50% of the same size. So if you check push, pullback, so this is a balanced push down. It's not really a crazy downfall. A crazy downfall, you really see it from here. You realize that somehow in this zone, there was either news that was released. Sometimes it is news that can make the market to fall drastically like this. News can actually make this market to actually fall drastically like that. So if you check, it went all the way. So now it going all the way now. You now need now, if you check now, as it was going, it was actually pulling back into certain supply zones. This was a supply. That one pulled back into that one. Okay, fine. So here, this was simply a break of a support break. You could have entered this trade based on a support break. If ever it pulled back into this supply as well, it was also going to be another trade, but it didn't do that. So it means you could have just made money with the break of the support. This one, break of this support and pull back into the supply. Break of the support, you could have made money. Pull back into the supply, you would have also made money. All those were entry points. So if you check, most of these entry points, they demand a high level of patience. Demanding a high level of patience, you must now know that has this market tapped into my major zone? Is this market in my major zone? If it's not in a major zone, that market will push up until it has reached a major zone. So in this case now, we're falling, lower low, lower high. So now, where is our previous major lower high? Was that one? So that one is a change of character now. The same change of character that happened almost 2 years ago, which is this one. This change of character that happened to the downside, check how it continued falling. It's the same change of character that we now have to the upside. Meaning the same thing that we're doing going down, it's the same thing that we're also now doing going where? Up. And going up, we have a highest point, which is almost one of the highest targets that I'm looking forward for GBP USD to reach onto before this year ends. I'm looking forward for this market to push all the way into that zone there. So because this change of character now, it means market momentum is now strong to the upside. What we were doing there, going down, we're now just doing this side, going where? Up. So going up, let's go. Change of character, the market came, and as it did pull back, there are certain levels that it didn't tap onto. For example, in this case, let's mark some significant zones. These are significant demand, right? Significant demand that was not tapped. And also someone can label this, but this one, it looks like it was tapped, right? So someone can label these two like this. Two demands, okay. Of which before, as this market was going all the way to change character there, you could have even gotten buying opportunities using this counter trend line break and retest. You could have gotten even on lower time frames. On lower time frames, you realize that order flow, it actually shifted way here, the bottom here on lower time frames, which is how you could have also gotten those buys targeting here after the target has been reached. you wait for a pullback, and then you wait for extra confluences or extra continuations. So now, looking to the left is always your guardian. If you look to the left, we have certain zones that are to the left. This is a major zone to the left, far left there, major zone there. This one wasn't retested. This one, it was retested. So the possibility of this market coming to tap into this one before maybe giving us a reversal. Because the market, let me now tell you something. The market is it's just a battle between supply and demand, a battle between buyers and sellers. It's just a battle between buyers and sellers. Who is going to hold? Is it the buyers or is the sellers? In this case, they came back into this demand. So they didn't touch this one. You could have simply gotten buying opportunities. Obviously, using lower time from confirmations, you could have got this. You'd have also got that, okay? So they went on. They went on and broke there. So now what is happening now? What is happening now? I want you to listen to me carefully as well here. And notice how I'm going to label my higher highs and higher lows. This one is my extreme lower low, right? There, the lower high was broken, okay? And where is my higher high? My higher high is the highest point that the market reached before it did any reversals. If you notice here, I don't have a clear higher high, because a higher high must come and break. Okay, well, let me say this one. This one is my higher high. It's the one that broke this high here, right? So if that one is my higher high, right? If this one is my higher high, where is my higher low? Where is my everything else? So now, this is now external structure. External structure now, according to external structure, remember, external structure, these are internal levels that must break. These are external levels that must break internal levels. If you notice, higher high, higher low, higher high, higher low. Where is our higher high, higher low, higher high? The reason why I'm saying I don't really have an external structure, higher high. I have internal structure, higher highs and higher lows, obviously. But external structure is the one that has to break this internal higher time frame structure. For example, in this case, this is an internal higher low. So if this market comes, if it drops from there and breaks here, I know that this is my extreme higher high. Once I have an extreme higher high, the market must drop and give me an extreme higher low, either on this level or on this level. So those are two major targets that we'll be targeting for any sales that we will take from either this zone or this zone. So the sales that you take, you know that those are reversals of this push that has just happened to the upside. Remember, after change of character, a market must give us every pullback into major level. So if you check bullish order flow, this internal structure has simply been bullish order flow. This has simply been bullish order flow. How could you have taken advantage of this? How could you have taken advantage of this internal structure, bullish order flow? If you look at internal structure levels or internal structure supply and demand, you will realize that they were actually being tapped. This was an internal structure demand. These internal structure demands, I'm going to put them in a different color. So internal structure demand tapped, you would have bought, right? Higher high, higher low, higher high, came back into the demand, right? Came back, went all the way to change character there. After the change of character, let's look at this internal levels. I told you about this one. Came back into this demand. Why didn't I mark this in this immediate demand? This one, it's a low probability because according to even Fibonacci retracement, it's above 50%. And for us to buy, we really need the market to drop below the 50% range. So this one wasn't a high probability. This one was not also a high probability because just below it, there was also another one. So this one, it was actually higher probability compared to this one and this one. This one and this one, comparing them with this one was actually a higher probability. So here, going down to lower time frames, the purpose of going down to lower time frames as well, when it has tapped into a major zone like that, you realize that on lower time frames, you could have gotten some confirmations, whether it's a trend line breakout, whether it's a change of character, or change of character pullback cases. All those things on lower time frames are what you will be expecting to see once the market has tapped into a major zone like this. On lower time frames, you would have gotten those entry points. Here, you could have gotten those buys targeting here. Here, you could have gotten those buys targeting here. So this one now, we are following now internal order flow. Internal order flow broken here. After we broke there, you realize that this demand here was retested already. No need for us to come back down there. This one was retested as well. No need for us to come back down. This one was retested. That's why you see this market never came all the way down here. So where is our latest demand here? Our latest demand is this one. This one was retested here. So it being retested there, how could one have gotten this entry? This entry could have gotten it either on, if you go to lower time frames, you could have gotten either a demand somewhere around those level, or even a fair value gap somewhere around those areas there. You would have gotten a demand or a fair value gap. So what is happening, this is internal order flow. These demands, these are internal demands, right? Internal demands, this is an external demand that is most probably going to be hit in the long run. So someone who is simply using trend lines and is not aware of market structure, they are limited. They are so much limited to so many details. Someone can just come and draw trend lines like this. This is not enough details. This is just I can say someone who is still a baby when it comes to the concept of structure, the concept of the market, the way it moves and everything. You're still a baby when you're still, I'm not saying there's nothing wrong with trend lines. When you hear me, trend lines are okay, so long you know and understand what is truly happening to the market. What is the real market structure? What is the real market structure? What is the real market structure saying? So in this case, even yesterday there was news and today there was news. Let me make this point so clear. News, especially those high volatile news create volatility, not direction. News create volatility, not direction. If ever we're going up before news, right? Let's say we come back, let's say into a demand here, right? And then this is before news, right? If ever this market is going to go up, news will only make this market to go up faster. It doesn't mean that news is the one that gave this market direction. News doesn't give direction. It simply creates volatility. Volatility is simply that fast movement. For example, here, what is happening? If you notice yesterday, I even took a buy. The buy that I took yesterday on yesterday's news, it was based on of a simple demand. This market was coming from this demand. This was the major demand. I was targeting it to come and break that internal level. I was targeting it to come and break this internal level, right? Of which it broke. So now the next target is this one, which is a supply that I drew from the past. That is why it's so key to draw these major levels to the left. They are so key because you use them in the future. So I have two levels, this one and that one, that I'm now looking forward for this market to push onto before any reversals to the downside. How do you know that this thing is going to sell? And as it will be selling, don't think that it's now downtrending. It's not even downtrending. Remember, we have a major change of character there. And according to external levels, we are still yet to come and create a major external higher low. So now this GBP USD still can push to this level before any reversal down. There, someone can even take some sales. There's nothing wrong with that. Then if it comes all the way and establishes this internal change of character, once it's established, get a pullback. There you can take sales as well, targeting this first level, second level. So already I have given you an analysis that can hold. This is an analysis that can last for even the next coming weeks, or even the next month or next months. on GBP USD. This is an analysis that one can actually follow. So once you have your major levels like this on the daily, going down to lower time frame, just simply going down there for entry confirmations and other confluences. So sometimes I even analyze on the daily. Once I've analyzed on the daily and sometimes on the 4 hour, all I do, let's say if I'm in the trade already, for example, let's say I was in the buy already. Obviously, I came out of the buy, but if ever I was still in the buy already, I could have just gone to lower time frames and gotten this confirmation, entered the buy. Then I wait for the market to break my major level, which was this one, first major level. Second major level that I'm expecting is that one. I'm simply waiting for the market to tap. So meaning, along the way here, I'm not even selling because it hasn't reached a major level. Major level, it means for me to start thinking of selling, it has to first tap into a major level like this. First tap into a major level, then that's when maybe I can start to think of selling. Not anywhere in between. Not anywhere in between. So this is how the market move. Remember what I said in the beginning. Have one major currency pair that you focus on. Between odd USD, Euro USD, GBP USD, and USD JPY. Between odd USD, GBP USD, Euro USD, USD JPY. Have one currency pair that you trade. Have one. Why am I saying one? If you master one, you don't need to master all of these to make money. One currency pair is more than enough to make you money on the market. Once you master one currency pair, for example, personally, when it comes to currency pairs, I only trade GBP USD. These ones, I don't trade them. GBP USD, I like that it's volatile. It's volatile. That's why I like all of these. They're also volatile as well. So you picking one, you're simply wanting to master and wanting to not stress yourself with so many analyses. So that is an advantage of focusing on one pair or even two pairs. That's the advantage of it. That's the advantage of it. So have one pair or two pairs that you trade, currency pairs, among these ones that I've spoken. Then, if ever you also want to delve into indices, that's where you can go to US 30, NASDAQ, and here also trade one of them. Don't trade everything, like as if you are, there's no need for you to trade everything. There's US 30, there's NASDAQ, there's German 30. These are three, right? Choose one, focus on one. Choose one. If you choose one here, choose one here, then maybe the third one, maybe you can also include gold, which is a commodity. Because under commodities, we have gold, we have silver, we have platinum. So if you pick one here, like me, I have GU here, I have US 30, and I have gold. Those are the only three pairs that I trade. Only three pairs that I trade. Only three pairs that I trade. If this one has an opportunity right now, it's in my major zone, I'll take opportunity here. If this one is not yet in my major zone, I'll simply wait and focus on the one that is an opportunity at the current moment. For example, currently right now, US 30, it gave me yes opportunities, I think last week, but right now it's still yet on my major zone. I'm waiting. This one gold, I think I'm also waiting. But GU already, I was in the buys already. So meaning that's the advantage of having few pairs. So if you have three, let it be your maximum. Three, let it be a maximum. Three, let it be a maximum. It will help you to master. That's the only way to master. You cannot master if you're trading 5, 6, 10 pairs. There's no way you can master because right now, even if I'm sleeping, if someone wakes me up, I can actually give them a summary of what is happening on GBP USD. I can actually draw a chart on GBP USD without me even being on the chart because I've mastered it and I know where it's coming from, where it's going, and I know what I'm even expecting. Even next week, next month, I know what I'm even expecting on that GBP USD. That's the advantage of mastering the art. That's the advantage of mastering the art. The only way to master the art is to minimize, reduce the pairs. Even when it comes to synthetic indices, reduce your pairs. Reduce your pairs. If you can have one, that's good. 2, that's fine. 3, let it be the maximum. 3, let it be your maximum. So guys, for today we're done. we are done for today. I hope you've gained some insight, some value, and I'm also hoping that you are going to become more consistently profitable because of this session that we just did. I hope you were helped